What is going on? Welcome back to Financial Journey. So today when I talk to you on Lucid, I want to go over some of the current data points, break it down, why Lucid is trending down as much as it is today, and what needs to change in order for Lucid to trend higher. Before I get into any of that, make sure to hit that thumbs up and subscribe. I would greatly appreciate that. And with that said, let's get right to it. So currently Lucid is down 1.85%, 15.5 million shares have been traded so far, 34.6 is the average. These are some of the transactions that have occurred on the secondary market above $100,000. So only about 5 transactions, and that does signal that big money is not buying Lucid, similar to the last several days. So the volume today is just attributed to shorts and a lot of algorithmic trading, so a lot of smaller transactions. But regardless, something does need to change, and I'm going to break it down on what is the true cause of this. But starting off today, there has been no news, no SEC filings, nothing like that. And as I've said over the last couple of videos, that's kind of normal. So Lucid's probably going radio silent until early 2024, as what a lot of companies do behind the scenes. Looking at options though, $618,000 in calls being purchased versus $596,000 in puts. So kind of evenly divided. Sentiment wise, 51% of all the options being done today are optimistic. Looking at some of the call options that are being purchased, it is anticipated for it to be roughly about above 450 by the end of next week. So that has gone down quite a lot. So I think a lot of people aren't really anticipating $5 anymore. Looking at puts, it is anticipated for it to be sub $4. So that kind of makes sense when it comes to the technicals. But regardless of all of this though, the broader market is still continuing to rally higher, and Lucid is staying in the dust. And that's very unfortunate. Similar to yesterday's video, shorts increased almost about 6 million shares yesterday. They were in full control of where Lucid is going, similar to today. Right now, despite there being no news, nothing like that, a lot of optimism in the broader market, but with all that, shorts find it justified to increase 2.77 million shares. 24.85% of the free float is being shorted. 220 million shares overall are being shorted. Cost to borrow average in comparison to yesterday is going down slightly, so 7.05%. And through interactive broker short availability does indicate that there's around 3.6 million shares available to be shorted. So something does need to change. Once again, with shorts increasing about 2.77 million shares, they are in full control. And this is similar to yesterday. Maybe that is why big money isn't buying. I'm not really sure. I have seen quite a few posts online of people talking on the PS ratio. Lucid's right now is currently 12.02. Polestar is 1.86. Rivian, Tesla, VinFast, and I did throw in their Ferrari as well. So in comparison to any and all of those, Lucid is considered a little bit high based on what they do offer for sales. So Lucid is struggling right now, and I feel like that is the sole reason why shorts are pouncing all over Lucid. So ideally, I would love for Lucid just to kind of nudge the PIF and say, hey, can you handle these shorts? Get them off of our backs, because they are, like I said, destroying Lucid slowly, and they are dictating where Lucid is going. And I would absolutely hate for the broader market to pull back and shorts just freely and able to just return all of these shares that they've been really doubling down and suppressing Lucid with, and just get away scot-free. So I feel like the PIF does need to do something. And there's been a ton of articles coming out about the Saudi Arabian 2030 vision, and every single one of those articles talks on Lucid. And so in my opinion, I feel like the PIF does need to step up a little bit more and protect Lucid, because their investment right now, I think in general, they're down 60% from their average. They have an average of I think $10.68, give or take. So they're down quite a lot. So they need to protect their investment, because there is entities out there that are attacking it. And ever since the holiday season, I think it was Thanksgiving, when a lot of companies clearly took the whole week off, you were able to tell that whoever is shorting Lucid is not from the States. It is on an international level, whether it be Canada, Europe, or Asia. Someone outside of the States really has a vendetta against Lucid and wants to bring it down. So I feel like Lucid is going to continue to be stagnant and trend down until this is fixed. And like I've brought up over the last couple of videos as well, ideally it would not be coming out from Lucid to fix it. So there won't be any news articles saying Lucid is going after the naked shorting or just the manipulation, because then as soon as they do that, Lucid is going to be considered a meme stock. You're going to have Wall Street bets all in Lucid's face, and the whole fundamental business will just be seen as garbage. So this is where getting the PIF behind the scenes to do all the dirty work might be advantageous. So I want to go over some of the technicals for a second, but I wanted to break it down on this and just play a quick 1 minute video of this, because it talks on how the broader market is set to continue to rally into 2024. And there will be a stage where a lot of big money is scouring the broader market for discount plays, value stocks. And I feel like that will be the stage that Lucid does have a lot of good second wind opportunity for it to go up. So once again, I'm just going to quickly play this. And then, yeah, after this, I'll go over some of the technicals.
About what we're seeing right now, the Santa Claus rally. Josh Brown, I'm going to come over to you. Are you a believer in this Santa Claus rally? I know it's low liquidity, low trading this week. Do you believe it continues for this half a day and the last day? Does it continue into 2024?
Frankie boy, Happy New Year. Good to see you. I don't call it a Santa Claus rally. I've been around for a long time. I call it a career security rally. What you're basically seeing is people who don't want to get fired from the asset management business in January. And we see this in years where there's just enormous performance going into Q4. A lot of the things that people were worried about end up not happening. And then all of a sudden, professionals look at their asset allocation, look at the degree to which they're trailing whatever their benchmark is. For some, it's the Russell 1000. For others, it's the S&P. For some, it's the S&P, but in real life, it's actually the NASDAQ because they pitch themselves as growth managers. But this is a phenomenon that takes place across the entire spectrum of professions on Wall Street, whether you run a mutual fund, closed-end fund, separately managed account, wealth management CIO, outsourced CIO. You might be somebody that's at a family office. It doesn't matter. In the end, you cannot have a NASDAQ up 50%, cannot have an S&P 500 up 25%, and be sitting with the amount of cash that a lot of people are sitting on. And that's why last week we had the largest single-day inflow of all time to the SPY ETF. That's not delicate. That's not a sniper rifle. It's a shotgun. It's get me in. I don't care how. We'll figure out the particulars after. And it's not surprising that you'll see this carry through to the end of the year. So Santa has nothing to do with it. People want to keep their jobs. We talked about this on the show pretty much nonstop for the last 8 weeks, and that's exactly how it played out.
So yeah, Lucid did piggyback off of that shotgun scenario as what he mentioned, but as well at the same time, a lot of analysts are saying that a lot of companies that don't do that shotgun kind of scenario are scouring the broader market for discounted plays. Stocks that didn't really participate in a very broad rally, because even in Lucid's case, you can kind of see over the last little bit, this has been very crappy and lackluster. So in general, it actually went down, whereas the broader market has gone up another about 15 to 20%. So Lucid is lagging. In my opinion, that might be a little bit of a benefit, potentially, as backwards as that is, because it might draw attention to it being a value play. But aside from that, though, this is very disappointing. And as well, the PIF or some entity out there does need to really fix what is happening behind the scenes with Lucid in regards to shorting. But with it at $4.25, it is trading between this pivot and this R1. So I did do a tweet yesterday saying this really needs to hold this pivot point of $4.23. So currently, Lucid is kind of staring off of a virtual cliff. As crazy as that sounds, broader market is rallying, a lot of new 52-week and all-time highs, and Lucid is staring off of a cliff that could trend it down very close to the 52-week and all-time low of $3.62. Because as it stands, the S1 is at 376. So those two are the next strong support levels that you need to watch for. Vice versa, $4.70. So if a lot of big money does get into Lucid, then potentially it could touch this R1, so 470, and maybe best case scenario $4.99 to get it back into the fives. But in my opinion, like, Lucid does need to get off their ass and do something. Even though they're kind of going radio silent, they need to work behind the scenes and do some partnerships and do some licensing agreements as well. There's a lot of opportunity for Lucid to make a lot of deals and make some good money in the short term. And if they continue just to keep the status quo, then they are going to continue to trend down. The market's going to see no additional value in them, see them technically as being overpriced, and cause it to go down to maybe Rivian levels, which would represent another 50% cut based on these prices alone. So let me know your thoughts on Lucid in the comments below. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. Give yourself a shout out. Did you buy today? Did you sell? What did you do? If it does somehow break this kind of $4.23 support, then I might be a buyer around the $4 range. My last buy was at $4.15. But aside from that, I don't know. It would be a very slippery slope if it does break that $4 mark. But who knows? Let me know your thoughts. Don't forget to hit that thumbs up. Like I said, one final thing, take advantage of this promo with Moomoo. Sign up for an account, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So this is one of the best deals in the market. Take advantage of that while you can. A link in the description below and also the comments. With all that said, I appreciate all of you watching.